So hello everybody. We will do a short introduction. My name is Sven Koshinowski. I'm a consulting partner at KPMG, and we are advising banks and fintechs and the ecosystem in digitization and in the transformation. Today we would like to talk about the future of banking, and the best to do so is to have good guests. So I will introduce you, starting with Simon Baldus. You are the head of business development from Lendico, which is one of the famous, well-known online lending marketplace for consumers and corporates. And before that, you had been at Rocket Internet. I think you had been at KPMG too. And Lendico founded by the Samuels and other guys. Happy to have you here.
Thank you so much.
Then we have Katharina Lüth from SavingGlobal, Weltsparen, being the head of Europe. And what you're telling later is on the saving and what is your way to do so, making better than the banks. And you have been a consultant too. You have been at McKinsey. Interesting, too much consultants. And now you're a fintech. Happy to have you here.
Thank you, happy to be here.
And then we have finally Christian Rebernik from Number 26, being the CDO. And what you're doing, promising, is to have a new account, being the new bank in Germany, in Europe maybe, and doing things better than before.
Yes, exactly. Thank you.
Great. So you are the future of banking, or fintech are the future of banking? That's a good question. And maybe just to introduce what we've seen the last couple of months is that first we had a lot of discussion on fintech. Everybody was saying, okay, it's coming, it's not coming, it's not interesting. Suddenly banks said, okay, might be interesting, we have to do something. They're spending a lot of money. They have the innovators, the accelerators, the hubs, etc. And now I think they are thinking we have to do something concretely, and they're building some solutions. But coming back to the fintechs first, what is the reason that you, for example, and your colleagues founded Lendico?
Well, I think it has two sides. On the one hand, we saw that this marketplace lending model, it worked in the UK and it worked in the US. But we thought those platforms, they think far too limited, right? The United States are always stuck in their big market. They don't expand geographically. And with Lendico, we thought, okay, banking or money is a commodity, right? Money is easily expandable, digitalizable. So we wanted to bring the marketplace lending model to the whole world. And also on the other hand, we saw the need for a different approach to traditional loan originations. We saw that the process of how the European Central Bank, for example, tries to get money into the system, to the SMEs, to the consumers, is inherently broken. So the multiplicators don't work. And banks, they can refinance themselves pretty neatly and pretty cheap. But their legacy systems, their infrastructures, and their branch networks just get in the way of passing it through in an easy way. And so marketplace lending for us was the perfect opportunity to smoothen out this imbalance. On the one hand, we opened up a new asset class for investors, and on the other hand, we provided cheaper borrowing rates, cheaper interest rates to our clients. So from that side approach, we just found that it was the most exciting venture to launch.
And is the German market, the consumer, ready to use it? Or is it maybe another markets, UK or other European countries, more open to use your product?
It's a question that is very, very closely related to regulation and how the regulators help fintechs to proceed. And I had a lot of discussions last week with BaFin. If you compare what the UK regulators do with the German regulators, it's a complete landslide difference. You have the FCA sandbox approval, so you have to educate the market even more, and it doesn't really help if the regulators not even actively support you, but just put you in one basket and say, okay, this is shadow banking, which makes no sense because we're not in the shadow and we don't do banking. So the word shadow banking just doesn't apply.
Okay. What was the reason to found SavingGlobal? There are a lot of banks with savings.
Yes.
There's no interest anymore?
Exactly. So first of all, yes, there are a lot of banks, and actually saving products, it's mainly, let's take out current account for a second, but it's probably the most relevant asset product of customers across the world, actually. But when you look at stocks, your bank offers you hundreds of stocks, mutual funds that you could buy, but if you go to your bank and say you want a saving product, they say, this is our saving product, congratulations. So consumers don't really have that much of a choice. They actually need to switch between banks if they want a better product. And customers don't really do that a lot. And then when you take that one level further and you think of the fact we have supposedly a single market in the European Union. We have a single currency in most markets, which is the euro. We have the European Central Bank. We have a harmonized deposit insurance of 100,000 euros. But still, for me to open a bank account in Italy, I need to get physically on a plane, speak Italian, sign contracts in Italian, even though I might get way better rates there. So what we wanted to do with Weltsparen or SavingGlobal was two things. On the one hand side, give people access to better savings rates, which they can often get abroad, but on the other hand, also allow them to switch between different offers, because who offers the best rate changes all the time, and you don't want to go through a new post-ident or video ident procedure every 6 months, every year, just because rates have changed. So we allow people to actually diversify from one single platform.
That's very interesting. So both Lendico and SavingGlobal, you're not looking only on the German practice, on the German market, but on the European market. So when it comes to number 26, so the most innovative bank account, so looking on Germany too, or are you looking or targeting on Europe too? And what was the reason to found number 26? A lot of bank accounts. I have a very good, I don't tell the name, online bank. Why do I need to number 26?
So why have we founded? We looked left and right and saw that many aspects now have been covered by other fintechs, like savings, like credit, like a lot of others, but nobody really tapped into the waters of the current account. And we thought this is quite an interesting space to be, to really offer their new solution for the current and next generations who expect actually also that banking must be a different experience. It must be built for mobile, it must be easy. You don't want to queue up to open an account, you don't want to wait for the weekend until the transaction is finished. You want to be, it should be free to pick up money worldwide. So this was one of the reasons why we actually thought that's a really great, not niche, but really a great market. And that's why we actually said, okay, we want to create a bank where you have a current account plus a MasterCard to really access your money all over. And obviously, Germany is our home turf. We are Berlin based, but Berlin, we already started in Austria and Germany at the same time. And just last week, on Thursday, we launched in 6 further countries. Okay. Spain, Italy, France, Greece, Ireland, and Slovakia. So we definitely want to become the first real true pan-European bank.
But again, if I look in Germany, the people don't change accounts, never do it. So they have 10, 20 years accounts. And looking to the UK, there is account switching services by the government favored. And only 1% changed in the last 12 to 15 months. What makes you feel happy or positive that the German will, or the other European countries you mentioned, will change the account and come to number 26?
In average, to our information, there are in Germany alone 1 million people changing their account every year. So far this year we have only 90,000 customers who signed up with number 26, which gives us a lot of feedback actually that people really love what they see and what they experience. And yeah.
Okay.
May I just ask around here, who has heard about number 26 so far? Please raise your hand. So that sounds very promising. Second question then is, who has yet opened the number 26 account? Please raise your hand again. So we have some more potential here, but thank you very much. I'm very happy to see here a lot of number 26 customers already.
So coming from this little advertisement session to the next question, but it's okay, that's fine. You're talking about clients. When you're talking about clients, we are talking about customer behavior and client behavior. And a lot of people are talking about the marketing flavors, digital native, etc. So what are you targeting? Are you targeting the younger people, which are incumbent to technology, or is it bigger? And which role plays a customer behavior in account opening, for example, in the number 26 product offering?
So currently, where we're coming from is really to target the customers who are firstly open an account. People who are today students who are actually using Facebook, who are using email and grow up with that instant messaging, where they also expect instant feedback and not actually going to a branch and opening an account with paperwork. Yeah? So this is one of our main audience. Then we see that a lot of people who actually come from other countries, expats, who sign up with us, because first of all it's English, our complete product, and secondly it's very easy for them to open an account as well. And third, we see also enthusiasts who are ready and open-minded to open an account with us. Yeah, so we see there's currently a lot of potential. For sure, not everybody is directly opening an account with us for good reason. I think there's also trust which needs to be built up. I mean, currently a lot of people are with their bank because they trust. There needs to be trust where you put your money. So, and trust is also established over time. And that's what we are seeing as well. Is that people who open with us an account, they have it first as a second account. It's not really just a rare number of people who open it and directly say that's my perfect salary account. But over time, we see a lot of people actually feeling comfortable with what they see and getting also more familiar and trust more number 26. And then they make it also their main account.
So trust is a question. Trust in savings, I think, is very much important. Do the people trust you, and what are your clients? Are they the older ones, the digital native? What are you targeting, and how customer behavior plays into your cards?
Yeah. So indeed, what's quite unusual, and it was at least slightly unexpected, our customers are a lot older than you would think. So if you think fintech, you think 25, maybe 30. Our customers are actually a lot closer to 50, or even beyond 50, which basically has to do with the fact that who has money to save? Let's face it, 25-year-olds don't have that much money to put into a savings account. So in that sense, we do of course see that yes, a lot has changed in the past few years. People do feel comfortable and more comfortable with complete online models. I mean, we have a phone hotline, but not a single branch, no place where people can go to. And yes, of course, trust with savings is essential, because I might try out a payments provider, let's say, and send €5, and if it doesn't work, so what? But if I'm going to send 10,000 euros to Bulgaria, I want to feel reasonably sure that I'll see my money again.
Sure.
What helps us a lot there is, of course, on the one hand side, we never have the client's money. The client's money goes via a German bank that's BaFin supervised and goes to other banks that are supervised by the according central bank in those countries. Plus, what really helps, and where people have seen in the past few years in situations of crisis, we have a very strong European set of institutions and of regulation. We've seen it in Greece, we've seen it in Cyprus. The 100,000 euros have not been broken, so no one has so far in the European Union lost any money there. So this is something that gives people a lot of comfort. I mean, Schäuble has said it yet again and again, so has Merkel, so has Juncker. So movement is going towards more and more centralized deposit insurance. So this is something that gives people the comfort that, yes, I can send my money abroad, but I also have German customer service and people I can talk to that will handle any questions or queries that I have.
Okay, you're bringing Mutti into play, so it's good, confidence. Again, trust and customer behavior. What about Lendico? So because you have not only the retail, but also the corporate.
Absolutely.
How can you bring it together, and how will corporate change? Because they're very traditional when you're talking to the medium size or even in the bigger size companies.
Yeah. So since we have investors and borrowers. It really differs. So if you look on the investor side, we of course have retail investors. They start out investing 25 euros, they look how it works, they get sticky, they build their trust, and maybe they put in 1,000 euros or even 10,000 euros. The other section we have on the investor side is the big banks, the institutional investors who see the asset class as promising, and we can say with we were quite proud of having attracted a significant number of funds in a very short time. That also they vetted our platform, they did their due diligence, and that also trickled down trust, and people start trusting if they hear the big names are investing. On the borrower side, of course, we have the retail borrowers, which are people like you and me who look for a loan. In Germany, it's not very common to talk about lending money from a bank, so they don't share that much information, but of course there are dedicated forums on the internet where people recommend Lendico. And what you said before, we have the SME part. It's very traditional SMEs. We don't find in startups. We look into the in the established players, people that have been in business for multiple years, and which is really the core of the German Mittelstand. And we see that there is a shift. So people, they have been stuck with their bank for a long time. It took them maybe 3 weeks to get an appointment, even longer, and there was no security. And of course, in the beginning, when we try to contact them, or we have a lot of events with partners who recommend us, they feel like, okay, how does it work? Are you supervised? And we say, of course we are supervised. Everything that is regulated is also done by a BaFin bank, and we are just the technology provider, the platform to smoothen out and to pass on the savings to you. And in the end, Mittelstand, they need security and flexibility. So if you give them an approval in 48 hours, they can plan ahead. And that's something they value so much that they are almost always willing to give us a chance to blow them away with our service offer.
Okay, interesting. So until now we're talking about new business models because of need. We're talking about trust and customer behavior. Let's talk about technology. And you just mentioned it. What role technology plays in the new business model in yours and in fintech and overall?
I think it's of the utmost importance. Technology lies at the core of our business model. Without our IT platform, without our developers, we would be nothing. And that's the reason why we constantly put funds into it, why we optimize, why we A/B test, why we try to be as flexible as possible in order to adjust to market demands, adjust to client demands. But for me, technology, it's not just about the front end, right? You can't just have a fancy interface. You really have to create value. That's your magic sauce, what's hidden in the back end. And this flexibility, this magic sauce in the back end, proprietary based on the best practices from the market, without having this oil tanker style banking, core banking system, right? You see Deutsche Bank Postbank merger had 1,200 FTEs working on that for Magellania, put billions of dollars in it. Now they have to split everything apart, and you cannot do that in the fintech. You need to be agile, and if you're not agile, you can basically stop doing anything, because a front end is not enough. Technology is the most important part that adds value to your product.
Agile, one of the best words. How about SavingGlobal and technology?
Yes, I mean, of course, fintech, the name says it all. Technology is, of course, crucial, and I couldn't agree more. It's not, yes, front end is important, and yes, of course, the whole being able to offer a platform to customers is a huge part of what we do, but in particular, when you think of the back end, what we're doing, we couldn't do without technology. Without technology, we would be sending loads and loads of paper back and forth between countries. We still do that to a certain extent where needed from a regulatory perspective, but we need to accommodate different document requirements from 12 or 13 different banks at the moment. If we didn't have an agile technology that would allow us to manage all these different requirements, we couldn't exist. We would basically not be here.
Shall I ask a question about it? Because remember, banks are doing its technology 40 years already, and what is new at number 26 or in similar business model?
For us, it's about the customer, and what we believe is that technology enables to create better solutions for the customer. Just giving you one example, I was last week at the gas station, and my account actually went to zero. So I had no money on my account, but I needed to pay the gas bill at the gas station. And with a few clicks, I activated the overdraft from my account and could pay 3 seconds later the bill. And this wouldn't be possible if there wouldn't be technology enabling this, enabling the real-time scoring, enabling the access via my mobile device to do this with a few taps. And I think this is the differentiator. So it's all about technology and fintechs, absolutely. But the reason what is really what's important is that it enables us to build a better experience for the customer.
Okay, this is interesting, and that's what I'm perceiving also at the bank side. They noted this, and if you take, for example, the CEO of BBVA, Gonzalez, have said banks have to become tech companies. So, banks are looking at, coming to the last question maybe before asking the audience to some Q&A session. When I look on technology, and the banks are starting to do this, so what prevents a bank to make a copycat? And just this morning I read a quote from Matthäus Schmidt from the Quirin Bank saying, you are only, I say it in German, Drückerkolonnen, so door salesman, a digital door salesman and woman, what prevents a bank to copy it and integrate it and fintech is gone? Is this right, or what do you think about this quote from him?
So maybe first of all the question, what keeps a bank from copycatting what we do? And our business model is actually quite specific because a bank has actually absolutely no interest whatsoever to offer savers an alternative to their savings product. The entire Sparkassen and Volksbank, they're extremely happy with the billions of euros they have in their accounts where they don't have to pay any interest. So first of all, there's not a huge interest on their end to actually do this. And on the other hand, to actually get a bank to cooperate with you, one of the first questions our partner banks ask is, are you owned in any way by a bank? Because yes, right now most banks have excess liquidity, so yes, they would be happy to give some away. They don't like to pay the money at the ECB. But there might come a time when banks will need liquidity again, and the first thing a bank would do in that case is say, you know what, I'm going to stop brokering deposits to other banks. So actually all our partner banks are extremely interested in this business model as long as it's not owned and run by a bank. So in that sense, we actually have quite an advantage. Regarding the second part, so are we a Drückerkolonne? I would say it's an online business model. It's self-selection, so customers can choose to bank with us or to not bank with us. It's not us opening the door and sitting there until you buy your Tupperware. So, no.
Okay. Interesting. So what about Lendico? And so what about the bank to prevent, to cooperate, to build it by its own, and they have the client, they have the platform?
So what I see in the heart of every fintech is this innovative DNA. It's not one department that does innovation, but it's everyone. Everyone thinks about how can I make it better, how can I make it better for the customer, and how can I be innovative. Banks don't have that. They might have a department that runs innovation, but maybe they are left out of the big processes, right? For a bank to be innovative, it needs to be the whole organization. And it's really hard to get 80,000 people or even more who have been in the bank for 25, 30 years, who know their day-to-day operations, who are a little reluctant to change, even to a changing front end in their banking system. So I don't fear that innovation potential. And also for banks to go into the lending sphere like Lendico, they would have to, most banks would have to close down all their branch networks. And they will not do that because they cannot put through those changes. And the closest branch is the branch on your phone in your pocket, right? It's always there, it's always open 24/7. So I really don't see the banks innovating in that. I don't see the banks entering. I know that there is a lot of cooperation potential, and so it might be a lot easier for them just to cooperate, try to get the innovative DNA from outside than to run it from the inside. Because also their employees normally are not motivated. Yeah, they are not motivated to take risks. It's anti-risk behavior those employees run.
Last short answer from number 26. So every bank has seen it. Every banker which works in your space has a number 26 account. I would guess 5% are bankers to look how does it feel. Your answer?
Just one sentence maybe to that. I think it's, if you look at other industries like travel, Hilton is a hotel chain, and Airbnb, it's so different to interrupt an industry. With so much less baggage, you're such more agile and so much quicker at Uber or at Facebook or at Google. I think these are quick-moving companies also because they don't have the luggage, so to say, of the past. And just to give an example of what we have no branches today. So we launched Cash26, where you just can withdraw and deposit money in supermarkets or in other stores very easily. Would this do another bank, a traditional bank, as bank branches? No, because they would hurt their own branches. So I think this is one of the key advantages, not having the baggage.
Thank you for this, and time is running out as again. So maybe two short questions and two short answers from the audience. Any questions? The micro in the front.
From the warranty, when I use your services and it bails out, I give someone the money for the credit. I have another feeling towards a bank that I can sue someone and I cannot so easily sue you. I just want to understand, what are you promising your retail lenders for security?
Well, so first of all, Lendico as a platform doesn't hold the credit risk on its books. So we are just a marketplace. So you hold a piece of the loan. You can start with 25 euros. So first of all, we offer you the option of diversifications, right? Don't put all eggs into one basket. Consumer loans don't correlate that much with each other. And from portfolio theory, as your portfolio approaches a lot of assets, it reaches market risk, which is very low in Germany. And we do proprietary risk assessment. So we run the numbers. We try to take out the complexity of the underwriting process and putting that out to the investors to look at. If they want to invest in that loan. Yeah.
My core question is,
Yes.
is there any warranty or not?
No,
Like,
it's
so it's
yeah.
my risk. I give
Yeah.
you 25 and I have to
Absolutely.
tell you that there is no true diversification, there's no risk. But if it bails out, then it's my
Yeah. So what we do, of course, we run collection processes with partners or in-house, but in the end, it's not a riskless product, but that's the reason why you get an expected return that is higher than I would put it in a savings account. And risk per se is nothing negative, right? Risk is always neutral. It just matters how you price it, right? If I get 4% return and 1.5% default, I still make 2.5% return, which is much more than I get for a zero risk deposit at BMW Bank. So it's a different approach, I would say.
You cannot run into risk. A lot of people sue you because you leave out warranty for the clients.
Yes. So we don't have any in the transaction.
So that's the difference from the banks.
Because bank have it on their book. Yeah, that's also the reason, why we don't need regulatory capital, because we don't put systemic risk into the market.
There's another question right there. I think we have a few minutes left for the Q&A, isn't it? That's fine.
It's a question to Lendico as well. I'm sorry. I'm not so familiar with the business model, but you mentioned portfolio theory and risk-reward relations and stuff, so it's basically quantitative. Do you do any qualitative research into the lenders, or do you use any data like credit reform or something like?
So you mean on the borrower side?
Yes, on the borrower side.
So I can say on the consumer side, we work with the standard operators, right? We get the data from Schufa, we take Burgel, we take Boniversum for self-employed. On the SME sides, we work with Kreditreform. We get the same data, we work very closely with them. And then we take that as part of our risk assessment. And for example, if we look on the SME side, we have an in-house analyst department, risk department. They run the numbers, they look at the BVAs, they look at the balance sheet, at the profit and loss statements, they calculate the cash flow capacity. And normally, because we're talking about quite small companies, where the MD or the founder is very much connected with the platform, we look at his personal risk as well. And we would also do an underwriting call with the MD to look how long have you been in business, how is your management team structured. So yeah, there's quantitative and qualitative data that we join together to arrive at a probability of default, which we then put into an interest rate.
Are there any other questions, maybe to SavingGlobal or number 26 or FinTech and all? There's one.
Yeah, my question is for Christian. For the moment you are using ID now, which is the ID verification where you make a conference call to prove that person is real. Are you considering to use automatic face recognition or anything like that in the future?
We hope that there is a lot going on in the future here to improve the process. Obviously, it's something which is still manual, so any automation is welcome, but we're always also looking for the most and best secure option to do that, to verify a person.
We just should have a conversation later. I think I have the
Please
solution
come
to
together. Any other questions? There's one.
Question to number 26. How many shops, how many partner shops do you have?
Pardon? How many?
Partnerships.
Partner shops, customer can withdraw and put the money.
Sorry, I didn't understand the question fully. How many patterns? Or
Partner shops. Partner shops.
Partner shops.
Yeah, so using number 26 application, the customer can withdraw
how many customers do we have? Or
I think
partner shop.
partners where they can
Partner
withdraw.
shops,
The
how
place
many
to
places where you
withdraw.
can withdraw money,
sorry.
we can pay.
6,000. 6,000 in Germany alone.
What kind of shops are they?
It's, for example, Rewe, the supermarket chain, or it's phone shops, a lot of them. And you can see them easily in the number 26 app. If you just open it, they are listed.
I think it's 8,000. CPS is offering 8,000 and number 26.
6,000 are currently
6,000,
available
okay.
where you can withdraw, pick up, or pay with your phone. Yeah.
You're so acting like a bank branch in a way.
Yes, exactly.
Any other question? 2 minutes left, so maybe a critical banker's question, if any. Everybody agrees? So if no any question more, thank you very much for the audience having listened. Thank you very much, you guys and ladies.
Welcome.
Happy to have you here.
Thanks for the invitation.
Have a nice day. Bye.